Let's do some moves. Jenny Harrington, new buy, 6th Street, specialty lending, TSLX.
Right, hot off the presses. I just sent the write-up to my clients on this.
Okay.
So this is a business development company, a BDC. What it is basically a private credit company, and they've packaged it up for individual investors to buy in the BDC TSLX form. It's got an 8% dividend yield. They generally pay a supplemental dividend on top of that, so your yield will probably be higher. They've grown that dividend at an annualized rate of 3.4% over the last 4 years. And this was an interesting process for us. We really started with the whole BDC universe, everything out there. And quickly 2 rose to the top for us as potentials for us. It was Ares and TSLX. We already own Hercules, and so as we looked at them, we're like, okay, TSLX, the way their portfolio is structured, the kinds of loans they offer is very complementary, not overlapping anything else we do. One of the other things was whether we spoke to research analysts, competitors, everyone kept saying this is the best management team out there. And by being the best management team out there, they have access to some of the best deals. You can look back, the dividends uninterrupted during terrible times like the pandemic, 8%. Like 2018.
8% yield?
Probably more. So
52-week high today, by the the way, too.
I know. That's a good point, though. Don't expect a lot of capital appreciation. Don't
it's a higher
buy this.
52-week high now.
I know. But don't buy it for the capital appreciation. Buy it for the dividend yield. And you can hold this, hopefully, for, I don't know, 10 years, 20 years. It's one of those kinds of stocks, if you just want the income.
Give me this pairs trade that you have in real estate. We'll get to a tech thing in a minute. But so you sold the NNN Reit, and you bought Realty Income.
Right.
Why?
As many of you know, I've owned NNN for years, almost decades at this point. And it is a great company. But what they do is they lend to all sorts of like 7-Eleven. Sorry, they don't lend. They have real estate for all sorts of things like 7-Eleven, as does Realty Income. The difference is Realty Income only holds properties or only rents properties to credit what am I saying? Like companies that have a credit rating, right? So historically, because it's a bigger market cap, a $50 billion market cap, because their tenants are higher on the credit spectrum, they've always traded with a discount at a premium valuation and a discounted yield. So I really don't know why. There's no good reason, but REITs have gotten shaken up, and these two stocks are trading at parity. So for the first time in decades, I've had the opportunity to actually improve the quality of the portfolio. Now I have a bigger company, a higher quality portfolio. They both have a 5.6% yield, so I swapped them out and just used it as a portfolio management opportunity.
Out of NNN into O.
Letter O. Sorry, NNN.
The other one is you sold Skyworks.
Right. And I was on last week, or maybe it was the week before, after they had that terrible earnings report. I said, we're going to catch our breath. We're going to see what we can do. We're going to watch to see if the stock bounces a little bit, see if there's any redemption, but there wasn't. We came away saying, no, the growth thesis on this is completely broken, and tossed it out.
All right.